Good evening, ladies and gentlemen. I am Tanvi, and we at Kotak Securities welcome you to our today's session on how to trade the energy markets. This will be followed by a question and answer round by the end of the session. So, now without any further delay, let me introduce you to our speaker of the evening, Mr. Ravindra Rao. Mr. Ravindra Rao is a VP and head for Commodities Research at Kotak Securities. Please join me in welcoming him. Over to you, Ravindra sir.
Thank you, Tanvi. Um, I welcome you all to this educational webinar on commodities. This is our second webinar on the commodity space. Last time we had educated you guys on uh, how to trade the precious metal space, and this time we have got the energy markets. And energy markets are the second important asset class in commodity space because that attracts huge volume, and also it is widely a globally traded commodity. And we have also seen good volumes happening on the exchange front in energies, that is crude oil and natural gas. And we have also recently we have seen because of the energy crisis, especially in the Europe, the prices have shooted up. If you see natural gas prices, they have gone to almost 3 4 years high. Sorry, 8 years high. And in case of crude is also trading at a high level. So we thought, let's this is the right time to talk about energy markets and educate you guys, so that this will help you guys in not only understanding the energy markets, but also trading these markets with proper information. I'll be starting my presentation. So, as I mentioned, today's topic is on energies. So, when we talk about energy in commodity space, especially in India, there are only two commodities which are widely traded, and one is crude oil, and the other is natural gas. Internationally, we have other commodities as well, like gasoline is traded, distillate is traded, the crack spreads are traded in energies. But in India, unfortunately, we just have two commodities. But we have different products in commodities. Earlier, it was just the futures market, but now we also have options in especially in crude, which has come very handy for our retail customers who have been trading options very well recently because of good liquidity and good volumes happening on the exchange. So let's see what are the different products available, how to trade the energy markets, what are the factors one has to look at while trading the energy markets, and how to take a decision in an informed way. So first, let's talk about some of the statistics. If you look at the exchange-wise market share in commodity derivatives, now this is from April to August 2021 data. If you look at the numbers, it is clearly MCX which has the large share in commodity derivatives. And if we look at a particular segment, on the segment front, energy, in case of energy, the topic on which we are talking today, it has almost 100% market share. So it is MCX. It is the only exchange where this products are traded. Brent is also traded on NSE, but it doesn't have much of the volume. But in case of crude or natural gas in MCX, it has very good volumes, and it is traded very widely. Let's look at top five traded commodities, and if you will see natural gas and crude in that top five commodities. So the first being silver, then we have natural gas. Natural gas recently has attracted a good participation, mainly because of the volatility. Because as I mentioned at the start of my presentation, that natural gas is trading at almost 7 8 year high levels, and because of that, traders and speculators have been attracted towards this commodity, and the numbers indicate that it has been one of the favorite commodity for traders. If you look at the the value, it is around 1,38,182 for August 2022. And from April to August, if you look at the value in crores, it is around 5,46,427. So this is how huge it has been traded since April to August 2021. And if you look at crude oil is also not behind. Crude oil is around 4,07,259 crores. That is from April to August. So crude and natural gas both come into this top five traded commodities, and these are a couple of commodities which needs to be watched for and should not be ignored while trading commodities. Now, as I mentioned, it is not only futures now, options are also active on commodities on the exchange, on commodity exchanges. Uh, if you look at crude has attracted a good participation in case of options. If you look at the August 2020 turnover, it was around just 143 crores. That is the average daily turnover. But if you look at July and August numbers, it has grown very well in last few months, and the numbers you can see it is around 5,212 crores of average daily turnover in August, and 3,615 in July 2021. So it is crude oil which is widely traded in option segment. Gold and silver is also traded, but it has not yet attracted much of the volume as crude has attracted. Now the reason behind this is recently when the energy in the crude oil prices had gone into negative in mid 2020 when the pandemic started. That time the margining had increased, and it was almost 100% margin to trade crude futures because of the volatility. And 100% margin in derivatives is it is not viable. So people have shifted to options wherein you just have to pay the premium amount, which is very low. Say the if the strike is say 130 rupees, so your premium is just 13,000 rupees as compared to 7 8 lakh rupees of margin in futures. So that's why traders have shifted to options, and that's why we have seen a good participation in on the options front, and this is going to continue because once the participation comes in, then it keeps on continuing. And especially for commodities like energies, precious metals and base metals, where the margins are pretty high, options comes very handy, and you can play a lot of strategies in that if the far strikes are active, and which is now the case for crude oil but not the case for other commodities. So option segment stats also shows that crude is one of the favorite commodities on the options front. So, who are the participants? Majorly, if you look at the commodity space, there are three participants. That is hedgers, speculators, and arbitragers. But in case of crude, the main participant are the speculators. Hedgers also come on the exchange to hedge their exposure in the underlying commodity. But majorly, if you see the participants are speculators, and that is what drive the markets. So these speculators, and to some extent the hedgers. So I think these are the two important participant who drive the volumes on the exchange. So, what are the price moving factors? We have to keep a watch on different factors to take a cue on where crude and natural gas prices are moving. So, this is just a snapshot. The source is MCX, wherein it shows that especially in this pandemic, whenever the COVID cases have risen, we have seen fall in crude prices, because what happens is when the COVID cases rise, there comes restrictions from different economy, and because of that the travel restrictions are there. So people don't come out, they don't drive, and that's why the demand for oil goes down, and that's why the prices go down. But whenever we have seen the cases recovering and economy opening up, prices again start moving higher. So this is one particular phenomenon which is unique to this situation, what we are seeing since 2020. But other than that, other factors that impact crude oil are one important factor is the weather. weather especially plays important a pivotal role in case of natural gas, because whenever the climate becomes chilly, natural gas is used more, and that's why the prices go higher. So that is one reason why natural gas prices are rising right now, because it is the winter will follow, and people use more of natural gas for heating. And other than that, the hurricane is another factor, because whenever there is a hurricane, we see production facilities getting disrupted, and because of that, the production that there are production shutdowns, and because of the supply tightness, prices move higher, and there is volatility. So recently we had seen Hurricane Ida, which impacted the production facilities. Recently, the productions have started completely. Otherwise, it was very slow and gradual. The production started very slowly, and that's why we saw prices, crude prices, and natural gas prices going higher. So these are some of the factors. Other than this, important factors are geopolitical tensions, especially whenever there are geopolitical tensions in Middle East, because the entire OPEC nations are placed there. So whenever there are any geopolitical tensions concerning, say, Iran or Syria, or something happens in Saudi Arabia, or for that matter in Russia, so this all this impacts oil prices, and because of that, the oil prices become very volatile. So all these factors are very important to take a cue on. But recently, as I mentioned, it is a COVID-19 that has impacted the market. So whenever the cases rise, we see a drop in prices, and whenever the cases come down, we see an increase in prices. So if we see the average daily volatility in case of crude oil for financial year 2021-22, it is around 1.9%, 1.95%, and in case of natural gas, it is 2.14%. Excuse me. And if you see the returns, crude has given around 15% return, and look at natural gas. Natural gas has given around 67% return. So that is why it has attracted more of speculators, more of traders, because of the sharp returns that natural gas has given in past few months. So this I have already spoken about the factors that impact energy, both crude and natural gas. So weather and inventory. Weather, I have already told that it is mainly it impacts natural gas. It also impacts crude oil. Then inventory reports are released every Wednesday for crude, and every Thursday for natural gas, and that also has some bearing on other prices, because that shows how is the demand and supply balance. Then the major factors are demand supply dynamics. So in that, you can see OPEC, IEA, EIA monthly outlook. Those are important reports, because in that reports you come to know what is the demand supply balance, crude oil inventory, and the hurricane activity. Currency movement is also very important, that impacts prices, especially the dollar index, because commodities are mainly denominated in dollar. So whenever there is a sharp rise or sharp fall in dollar prices, we see volatility coming in crude oil and natural gas prices as well. US economic scenario. So if the economic scenario is good, people will spend more, people will go out, people will drive more, and that will create demand for crude oil. But if the economy is not doing good, then the reverse will happen, and that's why the prices go down. Geopolitical tension, as I mentioned, any unrest in Middle East or any other country which is a major supplier or consumer of crude oil, it has an impact. Then OPEC policies. So recently we have seen OPEC coming out with their views on the demand supply balance. They have cut down, increased the production recently. Now they are gradually increasing it. Next week again we have OPEC meeting. So in that we'll come to know what will be their stance on the production, and that will impact the prices as well. So all these factors are very very important when you trade crude oil or when you trade natural gas, and you have to keep a watch on these factors to take a cue on where the prices are going to go ahead in the future. So which are the exchanges that we track? One is NYMEX, because NYMEX is the benchmark. MCX takes the price from NYMEX. So NYMEX crude oil and natural gas are the benchmark, are taken as the benchmark. And in India, it is MCX. As I mentioned, 100% market share is in MCX. So in MCX, crude oil and natural gas. So these are the two important exchanges that we need to track when we are trading energy markets. So this is the typical energy contract. In case of crude, we have the price quotation as 1 barrel, and the lot size is 100 barrel. Current price is close to 5,600, and the variant is 100. That is, for 1 rupee movement, one makes a profit or loss of 100 rupees. Lot value on that basis is around 5,60,000, and the current margin, it has come down now. Earlier, the margin was around 12-20%, and now it has come down to 12%. So as soon as the volatility subsides, the margining also comes down. Now the margin is around 12%, and the approx margin in rupee terms is around 67,200. In case of natural gas, the price quotation is 1 MMBTU, that is British thermal units, and lot size is 1,250 MMBTU. LTP is close to 420, 430. Yesterday, when we had updated this presentation, it was trading at 460. Now it is at around 420. So that is what the volatility is in natural gas. The variant is 1250, and the lot value is around 5,62,500 based on the variant and the LTP. Margin is here also, the margin is around 12%. So approx margin comes to around 67,500. So this is a chart for you guys. You can see the correlation between crude and Dow Jones. So if you see, crude exactly moves similar to how the Dow Jones move, because equity is an economic indicator, and that is what is seen in crude price also. So whenever Dow Jones moves higher, economy is that indicates that the economy is doing better, and if the economy does better, then the crude prices will go higher. So this is what the chart indicates, and if you see, it normally moves together. Sometimes there might be some deviations, but then it has to again follow the Dow index, and it closely tracks the Dow index. Now this is crude versus the dollar. So if you see, it is negatively correlated with the dollar, because as crude is denominated in dollar, whenever the dollar index moves higher, crude prices goes down, and whenever the dollar index moves lower, crude price go higher. So this is what is indicated in this chart as well. If you see, whenever a dollar index is up, crude is down, and whenever crude is up, dollar index comes lower. This is natural gas versus WTI crude oil, and it uh, actually, if you see, both are from the energy pack. So normally it moves together, but there are different factors which impact natural gas. There are different factors which impact crude. So sometimes you might see some kind of a deviation coming in both natural gas and in crude. But normally, as both are from energy space, they move in tandem, but you can see some deviations any particular if there is any particular factor impacting natural gas. The best example is, say, a few days back, when natural gas prices had moved sharply higher. In fact, it was yesterday when it moved sharply higher. It opened at around 40-45 rupees higher, and then it came down. Now the reason being, one was the expiration. Then we also had this energy crisis story going on. That is why coal and natural gas prices were going higher. Now that was the main reason, but then it subsided. So there are times when you see euphoric rally in one of the commodity, but in another commodity it doesn't happen. Same, we also saw this thing happening in case of crude in the pandemic, when there was buffer supply, and because of that, one of the crude contract went into negative, but that did not happen in natural gas. So there was a deviation again at that time. So Sometimes there can be deviations, but normally it moves together in tandem. So this is what the commodity looks like. If you see, as I mentioned, the current market price of crude oil is around 5,600. The market lot is 100. Tick size is one. Margin is 12%, and approx margin is 67,200. So the daily average price movement in crude is around 1.5 to 2.5%. This is an average price as per the daily ATR. So it comes to around 100 to 130 rupees. One can, considering the lower brokerage, one can break even at around 2 to 3 ticks. The PNL on average price movement is around 8,000 to 13,000. So this is what the potential it has, and it is. I would say crude is one of the favorite commodity for retailers because of the lower margins, and also because of good volatility, and one get to exit very quickly. As I mentioned, the break even is 2 to 3 ticks depending on the brokerage. So overall, this commodity is, I would say, a retailer's favorite. Then we have natural gas, wherein the price move is around 2.25 to 5% daily average price movement. Excuse me. That turns it into 5 to 12 rupees per day. Now this volatility has recently happened, otherwise it is not this volatile. But looking at the current scenario, it is around 2.25 to 5%, and the price movement is around 5 to 12 rupees. So for one tick, for 1 rupee movement, you earn or you lose 1,250. So in here again, in 2 3 ticks you can break even depending on the brokerage. But if you look at the PNL is around 6,250 to 15,000 on a daily price, daily average price movement. So these are the actuals, approximate, I would say, approximate actuals that can be seen while trading crude oil. And looking at the average price movement, it becomes a very good retail product. Natural gas is slightly volatile, so sometimes it can be a little tricky. But when the volatility subsides, I think natural gas is one of the best product, because it normally trades in it trades in a range, and in that range one can keep trading, and make good profits. But in case of crude oil, in case of crude oil also, you sometimes you get a range, but in crude you get very good volatility. I would say it is a volatility which the traders love. It is not very high and very low, so that makes it it make that makes it speculators favorite commodity, and that's why we see good volumes happening in crude prices. So, as I mentioned in my earlier slide, recently we have also seen options picking up, and in options we have seen good participation coming in on the exchange level. And because, as I mentioned, the if you see in futures market, the margin is around 67,200, and if you look at the option, say if the premium is close to 140, one has to shell out only 14,000, 15,000 rupees as the premium. So that becomes very lucrative for an investor, for a trader to trade in, as compared to the margin that is required in the futures. Or one can also take position in futures, and safeguard his position in the options market by doing a covered call, covered put, something like that. So a lot of strategies can be implemented because of the good participation in options. Now, this is particularly for crude oil. In natural gas, we don't have that. So in crude oil, the participation is good, the volumes are good, so one can always try to get into options market as well, along with the futures market. So what are the trading strategies that one can trade in energy markets? One is the momentum call, which normally comes from the broking firms. Then we have directional calls. Direction calls are Momentum calls are kind of intraday calls, which one can trade on an intraday basis. Then directional calls are also there, which which are, I would say, a short-term position call, wherein uh, one can take a position for a week or 15 days based on the short-term view if there is any major fundamental news in that particular commodity. Then option strategies, as I mentioned, you can play options. You can play in option strategies, either plain vanilla option strategies, or you can play multi-leg strategies, or you can play option with combined with futures. So all the strategies can be worked out, especially in crude oil. Then we have ratio calls. Ratio calls is gold and crude, so there is a correlation between gold and crude as well. So based on that correlation, one can trade gold and crude spread. Then crude and natural gas, as I mentioned, they both are from the energy pack, but we can see sometimes some kind of a deviation happening in this in these commodities. So that deviation can be captured, and one can play for mean reversion strategies. So this is also possible in case of crude and natural gas. So these are a few strategies, or I would say trading methods one can use to trade energy markets. So this is how I thought I'll just share how the technical setup looks like. Fundamentally, there are mixed factors in both crude and in natural gas. Especially in natural gas, there are worries about the energy crisis, but I think that also will be a short-term phenomenon, and we might come out of that as well. And at that time, natural gas price might go down. But fundamentally, if you look at crude is placed well, but it is also trading little higher. So there might be some OPEC pressure coming in the next week meeting, and we might see some kind of stance that might give some corrective dip in crude oil prices. But again, this is all what the market is expecting, what the news is flowing. But fundamentally, it is well placed. Now, if you look at the technical setup, technically it is trading close to the resistance near $77. Once it has tested $77, and then it corrected till 64 $63, and now it has again moved higher. Again, as I mentioned, due to the energy crisis news, we are also seeing prices in crude moving higher, mainly because crude is taken as an alternative fuel, and because of that, the price have moved higher. $77 is what the bears might be holding. If $77 is taken out, then there is a possibility it might move higher as well. So it is at, I would say, it is at the juncture of a breakout, and if that happens, it might further move higher, or else it might trade in this range which it has been trading since past few months. So one needs to keep a watch on that. Coming to natural gas, if you look at natural gas has come out of a multi-year range, and if you look at the breakout has been very sharp. The prices moved out of $2.503 range, and now it is almost double the price. It is trading at around 6.134. It has slightly corrected. Now it is trading below $6, because yesterday we saw some kind of a correction in natural gas prices. But overall, the setup is looking bullish, and it is slightly in the overbought zone, so slightly overstretched. But the extreme target, which is possible in case of natural gas, may be near 7 to $7.20. But it has almost come to that level. It has moved above $6.50, and it is, I would say, it almost tested those levels. So there is a possibility that it might either stay sideways now, or it might give a correction and then a move up. So the I would say it has posted a temporary bottom. If you see the red line, it has posted a temporary bottom near those levels, and now it has started to move higher. And if you see, it has been in a wide range since 2010 2011, and it has been trading in that wide range for almost 10 years now. So it has to breach that $7.2 mark to move further higher. Otherwise, there is a possibility it might trade in this very range. So this is what we wanted to we wanted to educate you guys on energy markets. We wanted to keep it very simple. We have not included much of the technical stuff, because what it does is, it is kind of a bombardment where you get a lot of knowledge at once, and then you tend to forget everything. So we thought we'll keep it very simple and easy to understand. So we just wanted to make you guys understand what exactly energy markets are, what commodities are traded in the energy space, and how they can be traded, how they can be tracked, what are the factors that need to be tracked while trading energy markets, and what are the different products available for the retail investors to trade in energy markets, and which exchange one can trade. So I think all this information has come out in this webinar, and I feel at least this will give one a basic understanding of what exactly is the energy markets, and how one has to trade the energy market based on this different factors. That's all. I'm done with my presentation, so Tanvi, you can uh, take up.
That was a wonderful webinar, so thank you so much. If you want to address certain questions and answers.
Yes. So, guys, any specific questions, any specific queries on energy markets, on crude, on natural gas? Anything you would like to know about trading energy markets? What are the timing for these markets? There is one question from Mr. Vivek. Vivek, the timing is on the Indian markets. The timing is from morning 9 till 11:30 in the in the evening, and sometimes it goes on till 11:55, depending on the US daylight savings. Otherwise, it is 11:30 morning. It starts at morning 9, and internationally it is almost a 24-hour market. It just the electronic market goes on the night as well. Just for half an hour, 1 hour, it is shut. Otherwise, it is traded 24 hours. Which technical indicators are most useful for energy markets? Actually, I would say energy markets are same as see technically. There are few indicators, a few tools that can work on any market, whether it be energy, whether it be stocks, whether it be gold, silver, any markets. So the best technical indicators that work, I would say, one is the trend line, which is my best, because the break of trend line on either side gives a good move. Then to check for the overbought oversold level, you can use RSI or stochastic, and moving averages you can just use to follow the trend. But those are lagging indicators, so I normally don't prefer using moving averages. And Other than that, you can always look for patterns, because commodities, in commodities what we have seen is patterns work very well. So if there is head and shoulder, or a cup and handle pattern, or an inverse HNS pattern, or say candlestick patterns, those work very very well. Trend line coupled with the patterns, and for looking at the momentum, you can use RSI or stochastic. I think if you use this kind of indicators, it will you can easily trade the energy markets. Which technical indicators are most useful? I saw RSI. What is suitable time frame for charting? See, suitable time frame. This query is from Snehil. Snehil, a suitable time frame, I would say it depends on how you trade. If you're a positional trader, you have to look at the daily and weekly charts. But if you're a day trader, if you're an intraday trader, then you have to first look at the daily chart to look at what is the trend, what does the trend look like, and then to take an entry you have to come to the lower time frames like the 4-hour charts, 30-minute chart, and for entry you have to look at 15 or 5-minute chart. So this is how you have to break your time frames. So from a position perspective, you go for daily or weekly, and from intraday perspective, the best would be go for 4 hours first, and then go for 30 minutes, and for entry purpose you can go for 15 or 5 minutes. Also, there are weekly contracts along with monthly. If yes, how is the week defined? No, weekly contracts still not available with the in options in commodities. Once I think the participation, the volumes pick up, we might also see weekly contracts coming in. Any mutual fund who trade in energy market? No, not yet, because mutual funds are not allowed to trade in energy markets. Like energy markets in the mutual funds are allowed to trade in commodities, but right now they can the guidelines that SEBI has given. I think they have to follow that, and on the basis of that, they can trade. So there is a very small percentage of trade that they can do. Natural gas options is still not active, I can't talk anything about that because it is not at all active. And in case of crude, it has been started and it is very active, and one can trade in crude options. No timeline. Elizabeth, Okay. So I think most of the questions have been answered. The rest questions are not relevant.
Thank you so much, sir, for being here with us today. Thank you for addressing all the questions and answers. It was a very insightful session with you today. We hope to
Thank you,
have
Tanvi.
you again in the next session. Viewers, there's a small note. We are not allowed to give you stock recommendations since we received many such questions today. Thank you so much. Thank you for tuning in.
Thank you.